I'm Diane Rizignola with REIT, and in conjunction with REIT's REIT World, I'm here today with Justin Knight, CEO of Apple Hospitality REIT, Inc. Justin, how are you today?
I'm well. How are you?
The lodging industry has been one of the hardest hit real estate sectors. What are the biggest reasons shareholders should remain optimistic?
It's a good question. The past several months have been particularly challenging for the hospitality industry, as you know, and for a number of service industries with the COVID pandemic and resulting slowdown in at least a portion of the economy. Hotels have struggled to get occupancy. There have been significant layoffs. There are really a lot of significant challenges. Looking forward, this isn't the first time in our history in the business that we've seen a downturn. After 9/11, we saw a significant pullback in travel. During the most recent recession, we did as well. And what we believe is that as we move further towards developing a vaccine and people get more comfortable traveling again, we'll see an increase in travel. At the same time, currently, hotel REIT stocks are trading at significant discounts to their 2019 valuation. And we believe there's an opportunity to buy in at a value price and take advantage of improvement in the business as travel returns.
And on the flip side, what would a second wave mean for the industry? And what needs to happen to ensure impact is mitigated?
It's interesting. We underestimated the impact when we came into this in March. And the impact on our business was much more severe than we had originally thought it might be. That said, in the 9 months that we have now of experience with the virus, we've developed both a corporate and a property level operating model that's enabled us to operate incredibly effectively and efficiently at low occupancy levels. We've fine-tuned that as we've seen a recovery in our business in various markets, such that we feel we're optimized. In addition to that, we've rolled out across our entire portfolio cleaning and sanitation protocols that are enhanced beyond what we've done before. Our hotels have always been clean, but there's extra attention being paid to those things. And other services and amenities have been modified to take into consideration the potential risks associated with the COVID pandemic and provide our guests with assurances that the staying at our hotels is safe. We think all of that learning and what we put in place will enable us to operate should we see a pull back in our business as a result of a second wave.
And finally, what do you think will be the ultimate fallout from this pandemic regarding the companies that survive and those that fail?
It'll be interesting. Challenging times prove companies, and there were companies coming into this that had significantly increased their risk late cycle, taking on additional leverage. The majority of the companies in our space did relatively well, and we're particularly fortunate to have come into the current pandemic with an incredibly strong balance sheet, very low debt, and our portfolio of highly diversified select service hotels can operate incredibly efficiently. We think that we're poised exceptionally well to emerge from the current pandemic in great shape and to be able to take advantage of opportunities that present themselves during the early phases of the recovery.
Justin, thank you so much for your time today.
It's a pleasure.
For more from REIT World, visit REIT.com.